It's Sunday, the 30th of July, 2017. I wanted to talk about another emerging African gold development story on the ASX, and that's West African Resources. Their code is WAF, and they're also listed on the TSX Venture in Canada, I think, under the same code. Their market cap's about $200 million, and they've got a project in Burkina Faso with, I think, about 900,000 ounces of reserves. I've heard about this company for a few years now and really haven't followed it that much. In the last year, they've really changed their project profile, which is now going to include some underground, really high grade underground drill hits that they've been hitting in the last year. And that's going to be a game changer, I think, for the project economics. I'm probably a little bit disappointed in myself. I haven't paid as much attention to this company as I should have. And reading in some of the broker reports in the last week and some of the previous announcements, it sort of dawned on me how it all fits together. I've got a couple of their latest quarterly. They haven't released their June quarterly, and I've also got a Sprott broker report that I've been reading through. So in February they released their open pit feasibility study, which is sort of fairly average project, pretty good production costs in the first few years, but really didn't have that sort of scale that you're looking for if you're particularly if you're looking for a company that's a takeover target, for example. So they had the 900,000 ounces in reserves, about 100,000 ounces a year, and 150,000 ounces in the first 3 years. So overall costs are sort of in that $750 range US, which is competitive, and but the scale's probably not quite there. But since then, those 900,000 ounces don't include any of the underground hits. So in this Sprott report, they talk about some of these underground intersections, and they're sort of modeling that the costs of those underground ounces could be as low as $400 US an ounce, and potentially looking at maybe sort of up to 500,000 ounces a year, 500,000 ounces of gold in those high grade sections. So when you add that all together, if you're putting it with the open pit ounces as well, you've really got a project that sort of stacks up in that 150 to 200,000 ounce category, and that's sort of what I'm really looking for in these gold development companies. They've got that scale, and the other thing that I like about this company is their proximity to some other projects, particularly this Kiaka deposit, which is owned by B2 Gold. And that's sort of, from having a basic look at their resources and reserves, I think they've got almost 4 million ounces in measured and indicated resources, but only at about a 1 gram per ton. And they're about, I think they're less than 50 kilometers away from West African's Sanbrado project. And a sort of project like that is really asking for some high grade ounces that they can add to their inventory, which sort of change their development economics. So there's a real potential, I think, there that West African B2 Gold is a mid-tier, mid to high tier sort of company now as well in the gold mining sector. I think they're looking at about 800,000 ounces a year this year in production. So they're quite a large Canadian listed company. And they previously, just as a side note, the chairman of West African Resources, Mark Connolly, was the chairman of Papillon Resources, which was taken over by B2 Gold probably 3 years ago now. So there is sort of that connection there as well, and I'm sure Mark Connolly sort of keeps in touch with the B2 Gold people as well. So that is something that I didn't know about, and that's definitely the sort of, when you've got those high grade ounces in a deposit that doesn't have any high grade ounces and probably needs that to improve their economics, that's a sort of bolt on that could be really useful for B2 Gold. That's sort of an aside, but I think this project on its own really stacks up once those underground ounces come into the mine plan. So I think they're looking at doing a resource upgrade in this quarter, so before September, and that will really hopefully put this in sort of concrete that these ounces actually are there. I think they're only in broker reports, so this is only speculation. But once the company releases it, I think the market might start to catch on, which they already have. On the chart, you can see that in the period since sort of May, the gold mining sector has been generally very weak. These sort of development companies have gone sideways to down, and that's across the sort of, I think, the Australia and Canadian markets. All the juniors have been relatively weak. But when you see this strength in market weakness, so you can see West Africans up sort of 50, 60% in that time, and really holding this nice little levels at near its 52-week highs. It had a good run up last year. I think this is probably when they had some of the first high grade hits, but it really looks like it wants to break out the top here. It's kind of a little bit of a flag pattern. I've talked about these many times in the videos, but it's something I really look for, is when you can get a nice uptrend and then a bit of a consolidation, sort of particularly an upward sloping consolidation. And this really looks like it wants to break higher. And reading some of the figures in those broker reports, you can see why it probably deserves a much higher valuation once those underground ounces are brought into the resources. And then next year, I think they'll update the project economics to include the underground ounces as well. So you could see, if you have a project with production costs sort of overall $600 an ounce, $600 an ounce, and getting toward 200,000 ounces a year, that's a really great project for a mid-tier company. So I think it attracts sort of a premium valuation at that stage, and this could be worth double what it is now, quite conceivably. So they're a company that I've entered in the last couple of weeks, and I think are poised to go higher. Burkina Faso, again, I know I've been talking about in previous videos, I've been talking about OreCorp, and they've had a lot of problems in the last few weeks with Tanzanian government regulations. Burkina Faso is generally one of the better jurisdictions in West Africa as well. I think it's a fairly stable mining code, and there seems to be quite a bit of development there by mid and larger tier companies. So that's another thing you've got to be wary of. And I think, Burkina Faso is probably in one of the better countries in Africa at the moment to be developing. So West African resources, I think, a good little play in that development space. One that's not that well followed as well. There's not a lot of chat about this on Hot Copper, for example. It's only discussed in comparison to some of the other African stories. It's not discussed at all. So that's often a good thing, I think. And this is probably going to be dominated by big money are entering now. I think they just did a massive placement in Canada as well, so that they're well funded for the net, probably till they will have to release their new mining plan next year. I think they'll probably have 25 million in the bank, so they should be well set. So that's another positive. But I think definitely a stock to follow in the next 3 to 6 months.